Walmart warns that prices will have to go up. Well, shoppers at the world's largest retailer will face higher prices. Walmart said it will have to start raising them later this month due to the high cost of tariffs. This warning comes in a week when a truce was struck between the US and China on trade and a significant reduction in tariffs from both sides for at least 90 days. Well, Harry Eastward is an investment director at Artemis. Harry, does this warning from Walmart show that the optimism investors may have been feeling after the agreement between China and the US was struck at the start of the week is now kind of on the wane?
I think that's exactly right. I think, obviously they have rode back on those really high aggressive tariff rates introduced, a few months ago. But I think, what investors really need to sort of focus on is actually those tariff rates remain relatively high. And if you think about from a Walmart perspective, they're really the bellwether of, the health of the consumer in the US. And actually, if you look at kind of where they're getting their products from, some 30% are from outside the US, and a large proportion of that is from China. So, I think it's actually, understandable that they're coming out and saying that they're going to have to raise prices. And yeah, we'll wait and see how that progresses.
But what have you made of the market reaction since this trade truce was struck at the start of the week? It was pretty aggressive to begin with.
Yeah, I think investors have been looking for, a reason to kind of dial up the risk exposure, and that really gave them a reason to do so. I think you really have to sort of temper some of that optimism with, what I just mentioned around the fact that tariffs still remain high. Obviously, we're going through Q1 earnings season, which is backward looking, but actually, when you're looking at some of the guidance that these companies are providing, it's much more uncertain. And actually, you look at where the index is, certainly the S&P 500 getting back to year to date. And I think you have to beg the question as to whether, that's the right level at this point in time.
Now, President Trump will shortly be back in the US from his Middle East trip. The US has agreed to allow the UAE to buy 500,000 of Nvidia's most advanced AI chips a year. What do you make of this? Should we still be concerned about security?
Look, I think if you kind of look at the relationships that the Middle East have been sort of constructing over the past few years, they've grown very close to China. Certainly, Alibaba is very close to the government in many of these Middle Eastern countries. So I think there is a degree of concern that's warranted. I think if you look from a US perspective, it should really be a boon to some of the larger tech companies within the US. So Nvidia, certainly OpenAI as well. And actually, from a Middle East perspective, this should allow them to diversify their economies away from, what is, fairly reliant on the oil price at present.
On Thursday, we also heard from the Fed Chair Jerome Powell. There wasn't too much clear guidance on rates, which isn't a shocker. But where do you see the Fed going with rates this year?
Look, I think if you looked at, what the market's sort of expecting, if you looked at, the market's around 2 rate cuts priced in for this year. I think what's really interesting around, Powell's comments is what he's going to do with the framework around, what guides that interest rate policy. So a move from employment to actually focusing on inflation. And that really comes about through a recognition that, in part because of tariffs, but we are entering a period of heightened inflation volatility and what seems like actually fairly robust, employment figures in the US. But again, we'll see how that progresses with tariffs.
That was Harry Eastwood from Artemis. And don't forget, you can watch more videos on Reuters.com.